Good morning, good morning, good morning, good morning, good morning. My name is Sean Dexter and I welcome you back to the Mango Grow for your daily Bitcoin analysis video. This is going to be a update on our leverage trades. We have a lot to talk about over here. For those of you who are in a long position, we'll be talking about how to manage your position. And also for those of you who are in a short position in the zone, I do want to talk about how you guys can manage your position as well. But before we dive into that, we did close a weekly candle as well as a bi-weekly candle. So this would be a good time to discuss how those of you who are trading Bitcoin only spot, right? If you guys are only in your spot positions and not in a leverage trade yet, let's go ahead and talk about what you guys should be doing. And it's pretty simple, right? We've had a plan for this entire cycle, which is, hey, as long as the bi-weekly dynamic is holding, simply stay in your spot trades. This has been one of the easiest, most stress-free mango trades in a very, very long time. You've been in your trade since around 25,000 if you have been following Mango since earlier in this cycle. And hey, if you guys haven't subscribed yet, make sure to do so, because some of you might be thinking, oh man, I missed out on this trade, nothing like this will ever come again. No, believe me guys, people said the same thing back when we caught the trade from $3,000. They thought they would never get another Mango trade like that again, but they come, believe me. Hit that subscribe button. When they do come, I will let you guys know. And for those of you who got in on these dips into the bi-weekly dynamic, what should you guys be doing? Same story. You got in on the trend and the trend is still holding. On this bi-weekly candle move down over here in the weeks of August, we said, hey, yes, it's getting dicey here, it's getting uncomfortable, but we don't have permission to exit just yet. We have to get permission from our rules, from our indicators. That's what your indicators are there for, guys, to give you a clear, no excuses reason to exit your position. And we did not get that reason. We came down, bounced off the bi-weekly dynamic, retested one more time on the top of the bi-weekly dynamic, and now we actually got that great bi-weekly candle close that I was looking for, about 68,300. This is looking fantastic. So if you guys are on your spot trades, whether you've been in the trade since 25,000 or whether you entered here at 54,000, you do the same thing. You just hold and you be patient. Now in 10 days we will be closing a monthly as well, so we'll have even more information, and that actually lets us transition perfectly into our leverage trade. So let's do a quick recap. Now this right here is a clip from one of the previous videos from around 2 to 3 weeks ago, where we were discussing our plan for our leverage trade. But price bounced fast and hard, and I had said I'm not comfortable buying so deep into the range. We are sitting too close to resistance. So what I'm going to do is I'm going to wait for a pullback into the zone over here. And our thesis at the time was, hey, we are closing a monthly soon. If the bulls fail to close above $65,000 on the monthly, we can look for the zone to be met as a bid opportunity. Okay, it's very important, guys. Prices don't go up and down in a straight line. Just because you're looking for prices to come down doesn't mean you are bearish. You could be looking for it to come down because you are bullish, but just looking for better opportunity, a better risk to reward trade, an easier trade, more importantly. And the zone over here was the easy trade, because if we were wrong, we could simply exit underneath the zone. Closing a candle underneath the zone would have let us know that, hey, we are wrong on this idea. You're likely going to come down further and we'll exit the trade. But if we do bounce, we were looking for that big move to around $120,000. But we'll get to that in a bit. But for now, since we are about to close a month very, very soon, let me reiterate the plan. Last month we said, if the bulls fail to close above 65,000, we will be looking to bid the zone at around 59,000 to 60,000, right? Now let me switch back on over to our live chart. And here we are looking at the 4-day time frame, and you guys can see that price rejected the $65,000 region leading to the monthly close and swiftly came down to our zone. Right? I'm going to zoom in for you guys now. You guys can see how we bounced off that zone once, twice, and then we got the mega bounce, right? Closing above our diagonal resistance line. But then I said, hey, guys, diagonal lines can be extremely biased because you can adjust it the way you want to, right? So we should always use something objective like an indicator or a horizontal line, because you can't adjust those to fit your biases, right? There are just multiple ways to draw these diagonal lines, and there's no one correct way, right? You'll only know which was the best way to do it in hindsight. So we drew in a zone of resistance right over here, and we said, hey, closer we are to the zone, the less excited you should be to be adding positions. In fact, if you over position, if you have a thick position, this is a good time to be looking to take some profits and reduce your position down to a normal size position. So that way, you would have taken profits and still be able to participate in the big move if Bitcoin breaks out of the zone. And as you guys can see, Bitcoin has now penetrated the zone over here. That is a huge win on its own, okay? But that doesn't mean that we just go and plow right through the zone. This is still a massive zone of resistance. This is a win though for the bulls, no doubt about it, okay? And that means any high-low opportunity is gonna be a bid opportunity. I'm gonna be talking about that very soon. Where is the next bid opportunity? Okay, we're looking for that high low to add to our position in case you guys have taken profits over here, or you do not like your position size over here because you under position for whatever reason, right? So there are multiple reasons why you could be looking to add to your position. One could be that, hey, you took profits and you're looking to add on a dip. The other reason could be that your plan was always to build into your position as you got high lows and more confirmation, right? So this first high low was your first bid, this second high low would be your second bid, and this high low over here above our resistance zone would be your third and final bid. Now, of course, things don't always work out so perfectly, but we will adapt as we go. I will keep you guys updated for the opportunities. So again, make sure you hit the subscribe, the notification icon. So when that bid opportunity comes, you don't want to be missing these trades, guys, because look how fast things can turn. Suddenly, you're out of position. Suddenly, you're stressing because you're feeling short your spot allocation. Suddenly, you're making mistakes. Now, I do want to emphasize, I still do not think that this zone over here is where you should be buying. If anything, you should be taking some profits if you haven't already yet, provided you overweighted your position over here. Now, for those of you who are short the zone over here, I want to go ahead and quickly talk about how you could be managing your position and what to look out for, because things could get a little bit dangerous in the zone. And I also want to preface this with saying that just because price doesn't go your way, for example, if you shorted the zone over here and price decides to go up, I don't want you guys feeling bad about yourselves or feeling like losers or anything like that. Trading is not about winning or losing. It's about putting on high probability trades over and over again and coming out ahead in the long term. So if you put on a short trade in this zone over here, I actually commend you, because this is a good zone to be putting on short trades, as long as you manage your trade well and don't get stubborn. I've seen far too many people who have this anger towards the asset and they short the asset because they're angry at the asset, not because they actually are being probabilistic traders where they're trading the high probability setups. Okay, so this zone over here, it's a good place to be shorting. Why? Because there are other long traders taking profits, there are other shorts piling in. This is a fine short. But when is the time to start paying attention? Well, now is the time to start paying attention. Closing this 4-day candle into the zone over here is your first sign to start paying attention. It's not a red flag by any means, but it is a time to start paying attention. As soon as you start taking on this high over here, guys, 70,185, and this high over here at $72,000. If you start seeing the bulls attack those positions, it could be one of two things. It could either be a liquidity tap before we actually break back down again, thereby screwing everyone over, where shorts get pushed out of their positions and longs get driven into positions. That will be the most painful thing for the markets at the moment, to see a fake breakout above 70,000 and then a breakdown. The problem though is, if you are short from this area over here and you're heavily short and you're not accounting for that move above these highs over here by having a low position size, if you are heavily short here and you start seeing price go up here, it gets extremely dangerous because it's a high volatile area, guys. Bitcoin could put in a god candle in no time, and that could be extremely dangerous. It could wipe out your account. So I would say, if you are positioned thickly, if you have a big short position, you need to start letting go of your position as soon as you start seeing these highs get tapped into, because you don't want to risk a high volatility event that happens faster than you can react. And believe me, you may not even be able to trust your stop losses at that point, depending on your position size and the exchange that you're using, because order books get thin, orders just get pulled, the order book just empties out. It can get dangerous. So I want you guys to manually manage your positions in this zone over here. I'm not saying let go of your entire position, just reduce it, reduce it, reduce it. It gets easier to exit your position if things get dangerous. And two, if things actually do turn around, you're still in position, at least a partial position that will make up for anything that you let go over here, right? So yeah, just wanted to talk about that quickly for those of you who are short this zone. Okay, now let's quickly talk about bid opportunities in case we do get a rejection over here and we break back down into this trading range. This could also be a take profit for those of you who are short in this zone over here. What I'm going to do is I'm going to go ahead and turn on our Ichimoku template right over here. And if you guys remember, we use our blue Tenkin and our red Kijun all the way back last month as a way to identify our bid opportunity, correct? Now what we're going to do is we're going to use the same template, but we're going to turn on our 21 exponential moving average on the 4-day time frame. And what do you know, it actually lines up perfectly with our squiggly line that we drew right over here, coming in at around $62,967. Let's just say $63,000. It's amazing how these squiggly lines are always so accurate. So that's where I would be looking for a take profit if I was short, or a bid opportunity if we see a hard rejection over here. I do want to emphasize this, guys. This is a tentative bid zone that I'm drawing out for you guys. This is provided Bitcoin makes this move in the next few days leading into the monthly close. Price is going to be unfolding in a dynamic way, and these bid zones may get adjusted. To stay up to date, make sure you guys hit that notification icon. Don't miss any Bitcoin videos in the next coming weeks. So right over here, you guys can see that I've marked out a zone between the Kijun and the 21 exponential moving average. That would be a brilliant way to get into position or to start letting go of your short positions and maybe even flipping long, because this zone over here is going to confluence with a lot. You're going to get your trading the wink opportunity. If you guys are in the C program, you guys know exactly what I'm talking about. You're going to get your support and resistance line tested, as well as exponential line tested, as well as this diagonal line being tested as well. So there's going to be a lot of confluence. If we get a quick move into the zone over here and a close about 64,500, that would be a spectacular bid that you'd be sitting on, leading into a potential higher high and a move to, again, $120,000. Now again, guys, this is provided price plays out this way, that we do get the rejection, etc., etc. If things play out another way, in case we start making our way towards that $75,000, $80,000 region, we will have a different plan. So stay up to date with the upcoming videos. Now, for those of you who are simply playing the spot and not playing this leverage whatsoever, you have nothing to wipe out. All you're keeping an eye on is this Mango bi-weekly dynamic right over here, keeping it easy, keeping it stress-free. Honestly, it doesn't get easier than this. Oh, and by the way, the sale that we're running, the BTC 2024 sale, will be ending this week, so make sure that you guys take advantage of it, especially if you guys are looking for the Mango dynamic, because altcoins will be giving you guys the same freaking trade opportunities that Bitcoin did, and it'll be even easier. If you guys remember last cycle on Cardano, we made a killing literally using the same strategy. Now in the next video, I'll be talking about targets if Bitcoin does break out of the zone, but for now we are running out of time. I hope you guys enjoyed this video. Keep it Mango, keep it easy, keep it stress free. I'll see you guys in the next one. Ciao.